Yeah, we estimate London accounts for maybe 4 or 5% of gross bookings. The top five cities accounts for about a quarter of overall bookings. So we're not changing our estimates. We think this is something that clearly is a net negative for the company. But judging by the way the stock has traded, which is effectively down 1%, that to us means that, a fair amount of it was already discounted. And so the question is, how characteristic is this really of London versus they're seeing maybe a risk of contagion into other markets? And we don't think that's the case. And remember, they're still operating in London, as Deidre said, and we'll see. I mean, I think if you read the press release that the TfL put out, in every other sentence they were saying how they were pleased with what Uber has done, but unfortunately they weren't getting, the full credibility or required to give them a 15-month license. So I think this is still work in progress, and we definitely don't think this is the end of that story.
In the meantime, Youssef, I'm wondering how you think Uber plays in the rest of the markets, particularly in the U.S., where both the companies, Uber and Lyft, have cited increased rationality when it comes to pricing in North America. I mean, does this make Uber more competitive, less competitive? How should we think about the dynamics within the space overall?
Right, so that's the key question. If you look at their operations and their performance in the third quarter, it was dramatically better on one metric, and that metric is the most important one, which is the take rate, effectively how much Uber keeps out of the gross bookings. And the model is extremely, extremely sensitive to that. 100 basis point change in that is literally, or a couple hundred basis point change of that is $1 billion to the bottom line. And you saw an improvement there in the US. You also saw an improvement there in Europe, which is what caused management to say, you know what, guys, we're going to turn profitable in 2021, when most of the street had them turning profitable somewhere between 2022 and 2023. So I think generally the outlook for Uber from a profitability standpoint, all else equal, will indicate that they're able to already generate a lot of money out of the Uber the Uber Rides business to fund the Uber Eats business, which is still problematic for the company, no question. But the competitive landscape in the rides business has really dramatically improved in the U.S. and increasingly in Latin America, where they've been butting heads with Didi. That seems to be improvement on the margin as well.
So you stand by your note on Friday? Top disruptor? Okay. All right.
Absolutely.
Just wanted to see if you change your mind.